When you start thinking about buying your first home after your mortgage, the next thing you have to look at is probably going to be insurance. There are lots of different types of insurances and some are more important than others. I'll also let you know what type of insurance you have to have in order to get a mortgage. Hi, I'm Barry, a mortgage broker here at Mortgage Monster. Before we get started, I really appreciate it if you could leave a like, subscribe and turn on notifications to make sure you never miss a new video. So first up, we have life insurance. Life insurance is a lump sum payment. That means it pays out a one-off payment if either yourself and your partner happen to pass away. And this can provide financial security for your loved ones and help protect them from any kind of financial burdens you have on the event of either one of you passing away. Next up is critical illness. Critical illness insurance is very close to life insurance because it pays out a one-off big lump sum should anything happen to you. Now you have to fall generally into one of kind of 50 or so categories. That include things like heart attack, cancer, stroke, multiple sclerosis, or one of normally about another 45 other different illnesses that you may have. As long as you hit the policy definition, then the policy will pay out a one-off lump sum which may help you either pay off your mortgage or maybe go on one last family holiday in the event of kind of serious illness and really make some beautiful memories. But as I say, a lot of clients will want to take that to make sure that the mortgage is all paid off. It means they don't have to rush back, maybe getting back to work and that sort of stuff. As and when they get better from the illness. As I say, critical illness will pay out in the event of you becoming critically ill, not necessarily on death, and you may even completely survive the illness that you may have and live a long happy life. It already pays out a lump sum because it just insures you against falling into one of 50 boxes you'll get, or one of so many illnesses. And next up, we have income protection. This basically covers you for anything you're signed off work or long-term sick for, providing you're signed off by a medical professional, and it just means that it can replace your income. So that means whether you're off work with an illness for maybe a year, 2 years, 3 years, 5 years, even until retirement, it means you're going to pay an amount every single month so you can afford to pay your bills, live in your home, and not have that stress of kind of having to manage back to work even when you've got some pretty serious symptoms or definitely shouldn't be working. And the policy start after a waiting period or a deferred period and normally go on and pay out until either the policy ends, until you retire, or until you pass away. So that's income protection. Last up is home insurance. So buildings and contents insurance is really, really important. It means that it covers you should anything happen to your home itself, but more importantly, it helps cover any losses that lender may also have. So remember that the mortgage loan actually helps you or is assisting you in getting this property to put up some of their money up as well as yours. So it means they want to make sure that insurance is in place just in case the worst were to happen. It means that they can get the property rebuilt again and could potentially, sell the property or actually, have an asset that's still there. A contents cover is going to cover you in case your contents get lost or stolen or whatever else it is. So I say that's home and contents cover, really, really important. There's only one type of insurance that you have to have in order to get a mortgage. That'll be in the mortgage terms and conditions, in little small print, and it just says that you have to have buildings insurance because it means if anything does go wrong, essentially the lender's money is insured and the property is insured just as it is for yourself as well. So definitely to have home insurance if you're looking to buy a property. Sometimes on a leasehold property that's included in your management fees, so please just check with that. But certainly a freehold property, you need to have buildings insurance. Thanks for watching. If you have any other questions, then feel free to let us know in the comments. Leave a like, subscribe and turn on notifications for more videos just like this one.